And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow. Hello, everyone. Welcome back to a Wealth Within update. My name is Jim Beach of School for Startups Radio, and joining me as always, I have Dale Gilham of Wealth Within. Make sure you read his book, Accelerate Your Wealth. It's your money, your choice. And you can find him at wealthwithin.us. Dale, welcome to another week. Welcome to June, the summer. How are you doing?
Yeah, your summer, our winter here in Australia. So welcome to the first day of your summer. I'm sure you're looking forward to it. And the coronavirus, lockdown easing across the state, so it should be much better to be able to get out. But again, you've got lots of turmoil over there at the moment, so it's not looking good.
Well, the good thing is that the coronavirus won't be on the front page for a while, and so we'll forget about it. The second thing is that you and I have been looking for a second event, a swan event of a particular color that maybe I shouldn't make reference to anymore or allude to. My question, how many thousand points will the market be down on Monday? Are you looking at that 15,000 number that we've been talking about, a true correction? What do you think?
Well, it's always been on the card, and I think I mentioned last week, the market's like a pendulum. You're never going to get it right 100% of the time. It's just laws of probability. And, we've also talked about the market going up in stairs and down in elevators. And last week, the market was up 3.75%, or the Dow was, and the S&P was up over 3. They reached levels that they haven't seen, in about 2 months. So they were both looking strong. They moved through resistance levels and it started looking quite nice and bullish. But as I keep saying, it's whilst, you might have 6 or 7 times out of 10 the market's bullish right now, there's still, 3 to 4 times out of 10 it'll just turn and go bearish. Now, I was expecting the Dow and the S&P to sort of peak sometime in June. I was talking about that last week. I thought maybe 2 to 4 more weeks up and then it'll come down again into another low. But geez, this could be the elevator, right? Somebody could be pushing the button saying down to the basement right now. So it is one of those situations. And I think it could even be a double-edged sword what's going on. Obviously, what's happening across the US at the moment with these riots is just terrible just to watch on TV, so I can't imagine being in amongst all of that. But you've got to keep thinking in your back of the mind, all these people out on the street with the pandemic still going. I mean, New York's still in lockdown. They still are in a bad way in New York. And so will this cause a second wave of coronavirus? And if that does, then the market's definitely going to head south because they're going to be locked down again or massive lockdowns right across the US. So I think it's a wait and see game, but I wouldn't surprise me if the market fell away.
Well, I tell you that the number one fear that I'm talking about with my friends, the emotion that most of us are feeling is something akin to fear. I talked to my brother yesterday, and he and his wife were actually sleeping with a gun on the side of the bed. They don't have a real threat, but they have fear. And fear is certainly a horrible market condition, a horrible emotion to take into the weak market, isn't it? I can't think of a worse emotion for the entire United States. We're all afraid. There's been rioting in 45 cities, I think. Everyone's afraid.
Yeah, fear is much more of a powerful motivator than greed. Greed is a powerful motivator, but fear trumps it so many times over. It's not funny because people jump straight away to negative and start to panic very, very, very quickly. That's why we saw all the hoarding, with the toilet rolls when the COVID pandemic was announced. We saw a lot of fear, a lot of panicking, a lot of fear mongering, a lot of people talking it up, overreacting to the fears. And it doesn't take take much to create that sort of situation, and especially when your property or your physical well-being is put in danger, you go into that fight or flight mode, and that's really one of the things we need to be worried about at this point in time, that we don't get into those situations. But, you know, again, you got to try and stay safe. I mean, this is really, from an Australian's point of view, being here in Australia, we don't see this sort of stuff in Australia. You know, it's unusual.
We don't look good, Dale.
No,
we don't look good.
I don't know anybody that owns a gun, and that's really strange. And you're talking about your brother having a gun next to his bed, and I live on, you know, like a large property, you know, and we don't have a gun at all. We have snakes and kangaroos and those sorts of things, but we don't have guns, and it's
Well,
really,
how do you kill
really
each
strange.
other then, Dale? I mean, good grief. Dale, I live very close to Atlanta, a huge metropolitan center, but still 15 minutes from here, there is a city, a suburb city that requires that every home own and possess a gun. I mean, that is...
Wow.
So anyway, do we want to go through the good news of last week? You know, PayPal was up, Lowe's was up, Nvidia was up. Is this worth going through at this point, or should we focus on next week? What do you want to do now, Dale?
Well, I think it's worth having a look at and seeing what, because it doesn't matter whether it's bullish or bearish, you always need to look at what opportunities are there. And if the market goes bearish, you know, where do you find safety in the market, or what sort of stocks are looking good? And we've seen PayPal, you know, it's been doing very well. So if we do get a second wave of a pandemic, PayPal's going to continue to do well. And that rose last month in May, it rose 26%, and it's up 61% since the end of March. So, and it's now moved up to a new all-time high. So stocks like that are doing well. Obviously, Amazon's doing well as well, but Lowe's, you know, the home improvement company, 51% they're up since the end of March, and you know, they rose 24.44% to a new all-time high as well just last month. Nvidia, I keep talking about that stock, or I have been talking about the chip manufacturers for a good 6 to 8 months, and Nvidia was up 21.4% last month again, and again it rose to a new all-time high, and it's up 34% since March. So there's some great stocks, but as we predicted, we talked about, I remember at the start, in probably early April, we talked about commercial property. And the worst performer for May was Simon Property Group. Was down 13.58%, and down 61% for the year. And they're a commercial real estate company. In fact, they're the largest retail real estate investment trust and the largest shopping mall operator in the US. Wells Fargo down 8%, 50% for the year. Gilead Sciences is the interesting one, because that was up very, very strongly not too long ago, but last month it was down 7.35%. It's a pharmaceutical, but and it rose 12% in April, so it's sort of going nowhere. But that one I'd stick on my watch list.
Well, at some point today, I had to congratulate you on just always being right. And since we've mentioned PayPal, let's go ahead and talk about Elon Musk. You know, so he was one of the founders there at PayPal. Boy, has he had a good week. I heard that he got his $700 million payday from Tesla because the appreciation of the stock hit a milestone. And then to have the president come to your launch and have a successful launch. And I tell you, Dale, everything he did looked so cool. It was so cool having the astronauts drive to the launch pad in the Tesla car, and then the inside of the capsule looked just like a Tesla cockpit. You know, a Tesla front row. And you've been, you know, tooting his horn the entire time. So I congratulate you, sir. You are correct. I was wrong. Enjoy.
No, it's not about enjoying it. It's just about laws of probability again. And, you know, when you're looking at, you know, Tesla, I mean, last year we had a bit of a banter between us, and I was saying it was bullish. I mean, you know, Tesla closed at $835 a share last week, and that's the highest monthly close it's ever had. So you're right, it's a big payday for Elon Musk, and it's up 138% since the low in March. and 350% since June last year. So it's nearly back to the high price it had, prior to the meltdown in March. But as I said, it's the highest close. 835 was the highest close. So I still like the stock. It still looks good. I still think it's going to be bullish. I mean, we are moving a lot more to electric vehicles, and over the next 20 years, that's just going to increase. But also, we've got to remember that, all the car manufacturers are moving into electric vehicles. So there's going to be a lot more competition. But you've got to like Elon Musk. He's like Steve Jobs, isn't he? He's very charismatic. He's doing all sorts of... he's a leader. He's talking about, year 2050, with, landing on having... communities in space.
Mars,
so people love they love that sort of talk, and they love having something to believe in, if that makes sense. And so it's a positive news story. But I do like Tesla. Very good stock.
Well, let's stick with transportation. I will tell you a cultural tidbit, and next week you can tell me if the stock is starting to do anything. People that would never, let me repeat this, never rent an RV or purchase an RV are RVing this summer. RVing, the camping world, is going to explode this summer. I predict KOA, Kampgrounds of America stock, to go up, and anything else in camping related, maybe REI retail. Everyone I know has rented a camper for this summer, and the prissiest women who would never rent a camper are camping this summer, Dale. So maybe a nail salon in the outback of Wyoming is a good business idea.
Yeah, look, I really think that what you've just said does not surprise me one little bit. Obviously, again, fear. Why socialise in normal places, hotels, etc., where lots of people gather, when you can have your own RV that you can disinfect and social distance while you're on your holiday. So, it makes perfect sense to me that people are doing that. But I will have a look at some of those stocks for you, and we'll bring them up next week.
And it leads into our next topic of conversation, that there's huge changes in the world, that instead of the Ritz weekend, we're thinking of the KOA weekend, and you wanted to bring up some suggestions for things that we should do in this new world, as we realize that this is probably going to be like this for a long time. What are your thoughts?
Yeah, I know when sort of it really first started to grab hold, the COVID-19 pandemic, and we were chatting about how we were thinking that the world really has changed. There's a big paradigm shift happening, and so I'm thinking, geez, we're starting to come out of it now, hopefully. We are starting to open the world up again. People are starting to get back to work, but is it really normal? And the answer is going to be no. It is not normal. It's not going to be normal ever again. So what do you do? And people have realised that their jobs aren't permanent. Things can happen. They're going to be out of work. And so there were three things that I thought of. Well, these are things that I think people should be doing or could be doing to help future-proof themselves, because it doesn't necessarily matter what happens in the world. It's how you deal with it that counts. And the first thing I always come up with is reduce your personal debt. And in the US, Australia, and around the world, people have too much personal debt, which costs them a lot of money and servicing loans. And so, number one, reduce your personal debt, and that will reduce the risk that you have. If you do lose your job, you're not going to be losing your house or your car or anything else, and you'll still be able to feed the family and pay to live. So that's the first one, always reduce personal debt. The second one is do some personal development to increase your value. And why I say this is one of the biggest things that I talk about with young people when I'm mentoring them. It's, as a boss employing people, you get everybody applies for a role and they've all got degrees and they all look great on paper, but what are the things that they do that are different? I can't teach attitude, I can teach skill. And so what I say to young people is do some personal development. What are the books you're reading? What are the things you're doing to improve yourself? Because our company is the name of our company, Wealth Within, was designed because the more I build wealth on the inside, the more my wealth on the outside increases. So if you make yourself more valuable to an employer, they're going to employ you first and they'll give you better pay rises. So the more personal development you do, then, as I said, the more attractive you become. And the third one is something I've been doing since I was 19, and is develop multiple income streams. And this one's really, really critical, because if you're just living on a job, that means you're just over broke. You need to develop multiple streams of income. That could be from, having stocks, having property, having income producing assets in other areas. Could be having a business, could be doing all sorts of different things, but don't necessarily transfer your time for money. Use leverage and get other things making money for you, like the stock market. So that's the third one. Develop multiple streams of income.
Well, I believe all of those things, and very similar to message to what we teach on School for Startups Radio, where we just hate risk and we love everyone who reduces or increases the revenue streams in a new and exciting way. So I couldn't agree more with you, Dale. You're dead on right. So they need to watch you and me a lot more, and that will satisfy numbers 2 and 3, and they want to reduce debt. Maybe we don't need those new Apple products. We think we do.
Yeah, spend less, earn more. That's what you should be doing.
That's right. All right, Dale, prediction for this coming up first week of June. Any thoughts?
Geez, it's a tough one this week, obviously, with what's going on around the US in the riots. But I'm still inkling that we're probably going to have another couple of weeks up. But I'm not going to discount that you could open up on Monday and start tanking. But one of the things I know is that the last 4 or 5 weeks, that whilst the market's risen, it's come back a little bit at the end of the week. And the amateurs open the market, the professionals close it. And if the market's closing a little bit lower at the end of the week, that means the professionals aren't pushing it through. So it's still on that sort of edge where it could go up, it could go down, but I'm still thinking the next 2 weeks up at least.
Well, I'm telling you, the amateurs are selling Monday morning, and so we will see next week. Dale, you be good. Enjoy the cooling weather. We will enjoy the beginning of what could be a hot summer here in America. We will talk to you again soon, Dale.
Take care, Jim. Bye-bye.
Thank you. Make sure you check out Dale at wealthwithin.us, and both of us will be back next week.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, as I mentioned a little bit earlier with Jim, the market was quite interesting last week with both the Dow and the S&P up over 3% for the week. But again, the amateurs, as I said, the amateurs open up the market and the professionals close it. And so, with that slightly lower close there on the Friday, that's a tiny little bit worrying, but nothing super. Again, volatility is something you can't predict. So what's going on around the US with all the riots in all the different cities and what's happening may cause a second wave of the pandemic. All sorts of things could happen, and we could get some bad news. And as Jim is predicting, we could be a very big meltdown when the market does open on Monday. So, we're recording this on the Sunday before the market opens. So it'd be interesting to see what does happen on Monday and Tuesday. But it could be a bit of a knee-jerk reaction. People may be selling off. The retail investors may sell off into the Monday. And then the investors come back in maybe Wednesday, maybe Thursday or Friday, and pull the market back up to where it was. So just be careful. Don't trade on this volatility. It is a bit more hit and miss. As I said, volatility can't be predicted. But let's go and have a look at the chart at the Dow and get my thoughts on what's technically we're actually seeing. So on the left-hand side of your screen, monthly chart as normal, and you can see here beautiful big April and May traded up very, very nicely. Closing not too far off its high, which suggests it is more bullish. But looking over on the right hand side, we can see here, my longer term momentum, this grey line. If you look here, it didn't close above that, but that's looking quite nicely bullish, breaking out of this sideways pattern that it's been in since, what's that date? Mid-April. So for about 6 weeks, it was pretty much going sideways until last week. But we've now broken through to make the highest high that we've had since these sorts of areas back in early March, which is really, really good. So nearly 3 months at the highest point. So what I'd like to see is it move right up through into this 27, possibly 28,000 points. I still think the market could be rising for another 2, maybe 3 weeks before it does have another downward move. Now the next downward move may not be super big. It may only be a slight move down, maybe 5 to 10%. But if it's much bigger than that, if we do get some bad news, we do get a second wave of the pandemic. Remember, New York was still in lockdown, so there are still pockets around the US that are worrying. And yes, we are trying to get everything open again. But you still, it is a very infectious disease, the COVID-19. But so let's wait and see. But just be careful. Make sure you protect your downside. Let the upside happen for itself. But let's get into the questions that you've been asking me. Let's get into that right now. Now, the first question we have today is from Riley, and Riley says, "Hi Dale, I bought CRM, or Salesforce is CRM, that's their stock ticket code, on the 29th of April at $159. What's your opinion on the buy? Thanks." So let's go and look at Salesforce right now for Riley. 29th of April, so yeah, okay. I think it's not too bad, mate. I think you've done really, really well. I think it's a nice, beautiful, bullish stock. And Salesforce, I was talking about this stock, probably talking about that 6 or 7 weeks ago with Jim on the show, talking about it, because a lot of Salesforce is a customer, more than a customer relationship management or CRM system. It's more of a marketing system. So people with home-based businesses, etc., could be going and subscribing to Salesforce and programs like this, and it does help people work remotely, because you can use it as a cloud-based software system, or it is a cloud-based software system. So these sorts of stocks should do well. Right now I think it's looking good. I think it might come down over the next 1 or 2 weeks, but right now I think you've made a really good decision, Riley, so well done on this one. I'm not sure why you bought it, but it's not too bad. The entry level was okay. I'm not sure what the rules you had around it, but whether that was solid rules and trading rules, or whether that was more, I think this stock's going to go up. Right now you've done okay. Just make sure you do have a stop loss on that. Next question we got's from Gav, who says, "Hi Dale, snagged Uber at $18 and have a 10% trailing stop on it." Well done. Good to see you've got a stop loss on a stock. I see it's trending up. Your opinions on Uber and its current upward trend? Thanks for everything. Now, Uber's an interesting one because it hasn't made money yet. Its ride-sharing business hasn't made, it's in a loss situation, and obviously with COVID-19 and all the social distancing, it hasn't done well, that part of it. But Uber Eats has taken off a lot more, obviously, so it's balancing out. But they do expect to make a profit this year. But that was pre-COVID-19 days. They were predicting that overall they would be profitable. But let's go and have a look at the stock. So I'll just bring that up now. Looking at Uber, it hasn't, as I said, it's only a pretty new stock. Beautiful big stock here. It's been in an uptrend. We're seeing 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks up. I would suggest it's probably going to start to fold over in the not too distant future. This is a big move up through here. We had through here and then it came over. So we don't have a lot of history on bull runs on this stock, but it's a little bit overdue for a pullback. And if you have got this stock at the moment, just keep your 10% stop loss on it. It does look like it's reasonably volatile, but I would suggest it's a good buy. What you've done is very, very well. So well done on that. So a good pick, very, very, very good pick, if that makes sense. And it is trending up nicely. So let's go and look at another couple of stocks. And we did talk about Tesla with Jim, and I also wanted to bring up another stock, which is Gilead Sciences, because we did talk about that in the report. But looking at the stock, this is what Jim and I were talking about. Now, prior to the move up, right up here in this move up, Jim was talking about why he said I was getting it right, because he was saying it was bearish and was going to fall away. And I'm saying, no, it's going to rise. And I thought Tesla was bullish. So all the way through here, he thought it was bearish. And the part of the reason why is because a lot of the short sell, there's a lot of short selling on Tesla. People were saying massive amounts of short selling was on it, but the charts were telling me that it was bullish. Now, I just happened to just read the chart, not look at the news. It did fall away very, very heavily into March, and you can see how bullish it's been since that low. And if I put my pointer on there, you can see there 138.22% since the low in March. So it's looking nice, good looking stock at this point in time. But again, another one, it's a bit folding over through here, so it is little bit overdue for a bit of a pullback. So, but again, I would suggest it would be continued to be more medium-term bullish at this point in time, but I will expect a pullback in that short term. And if it's not too big, then it could be an opportunity for you moving on not too far down the future. Now, Gilead Sciences is obviously a pharmaceutical company. You can see it trends beautifully well. Look at that. There's massive, beautiful trends both ways. Finding some massive support around that $60 mark. So it is looking good, holding up. Last month it did fall away, and that's why it was on that list as one of the worst performers through May. But April, it was one of the best performers. So again, put this one on your watch list. I think it's looking good. It's not unusual to see a stock break out of a sideways move up and come back down to where the top of that roughly is, and so which it's done in last week. It did do very, very well last week with a $5.74 range, looking very, very nicely. So stick that one on your watch list as a possible for you to purchase should the market continue to move on. But again, just be careful this week, because it's only going to take a little bit of negative news or something going on and the market will tank. Remember, it goes down in elevators and up in stairs. So I think somebody's standing with their finger on the down button at the moment. So if you might see a lot of volatility at the start of the week on the Dow and the S&P. But I would expect the end of the week will tell me a hell of a lot more about what's going to happen in the next month. And I'm not really positive for the second half of this year. Once we start seeing second quarter reports coming out of the US after this second quarter finishes at the end of June, we'll start seeing second quarter reports. So that'll be interesting to see that, and that will help us to understand what's going to happen in the second half of the year. But thanks for sending your questions in, and thanks for watching till the end of this video. If you have a question for me that you'd like me to answer, or a US stock or a Dow stock or an S&P 500 stock, just stick them below. For any Australians watching this, I'm not going to talk about Australian stocks on here. It's all US stocks only, so please put them on another report, but US stocks here. I will get to answering all your questions. Remember, I do these US market reports every single week, so hit that subscribe button now. Click the bell on the right of it so you know when we go live with our latest stock market reports. If you're watching from around the world, please tell me where you're from. I always like to hear from people around in other countries, and tell me where you live, and I'll say hey to you. So for now, I'm Dale Gilham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.